Hello, 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 everyone. Mike Arnold here, co-founder, Patrick, and partners with the soon-to-be-on Bob Iacchino to enlighten us all with what is next. So, welcome, welcome, welcome. Hey, John. Hey, hey, Waka Waka. Good, glad you had good trading today. Hello, Wavy. Yes, quad witching tomorrow. You're ready? Oh, Coco's ready for the stock market to be dead. It's probably the fall of America. The golden era is over. Very positive comments from Coco. It's not dead. This is just you'll. It's not going to go away. It might get a lot tougher out there. John, we're almost at 350 on the spiders. Let's go get it. Waka bought some Tesla shares and options. Thinks it's going to bounce tomorrow, shoot up with the option expiration. Good afternoon, Patrick. Some high flyers taking some big hits today. AMD, Tesla, Shop, and ARC. So we will see if that we do get the reversal with option X tomorrow. We actually have potential for a capitulation bottom tomorrow also. If we do sell off, we have a big probability for a capitulation bottom. If it rallies, there is no capitulation bottom. That's what's ironic. Uh, you guys think it's the rally in tomorrow? Good evening, Anissa. Too many guns, shortening the money. The option expiration tomorrow is about in line with what we normally see when fourth quarter options expire in December. So it is huge. The positioning is huge. The two major pin strikes for puts are 3,700 and 3,600. So keep that in mind. AAP's World, good evening, good afternoon. Watch Powell make a bullish comment tomorrow. Yes, Powell is on at 7:45. Let's see. Why is the VIX not making new yearly highs? No, still no. This selling's been pretty orderly. It's not panic yet. It's not panic. So let's see. Hey, what's up, Andy? Thank you for being in the chat. Sashi, glad to see you. Yeah, no, it's a negative gamma. Big shift tomorrow in gamma 2. You can't trade this market, then sit on your hands. Let's see. I'm just going short and staying short. All right, George. By the way, before I bring Bob on real quick, we do have Fed Powell, and then at 8:15 during the live stream, we got industrial production coming out. So JPOW 7:45. Then the consumer board leading index at 9. Then we have the rig counts. By the way, pretty bloody day. Mega caps got beat up pretty much. Walmart up nicely, watching for a little trade in Walmart at the moment. We can take a look at that after Bob. 75 basis point. Remember, we're still 6 weeks out, 5-something weeks out on the July hike, but they're still expecting 75 basis points and deep in negative gamma territory. And the big is negative gamma territory is that 3,600 where it does peak. So could we definitely see volatility tomorrow could be absolutely brutal as we get the final day of a lot of these options because things will whip around very quick and gamma can change on a moment's notice this close to option expiration. Adobe after hours missed and was down. All right. All right. Let me bring on. I don't even need to talk about subscribing. You're all here to see Bob anyway, so here he is. If you want to see more of Bob, just subscribe. Nice shirt.
Hey,
Hey, nice pink shirt. Or is it peach?
I think it's pink. I'd go
It's
with
pink?
pink.
All right.
Um, I think what this reminds me most of this period of time is 72, 73, 74, 75. And I suspect we're going to have very similar price action. Basically, if you go back and look at the S&P in the 70s, it doesn't look like it did much at all. That was a time of stagflation. The height of the stagflation was between like 72 and 75, right? Oil price shock kind of culminated in 77. But if you look at the returns on the S&P 500, 1972 was 18.9% positive. 73 was down 14.6. 74 was down 26.4. 75 was up 37.2. 76 was up 23.8. 77 was down 7.9. And then we went on a run, 3 positive years. 81 was down around 5%. And you didn't get a negative year again until 1990 that was only down 3%. And then you have to go all the way to 2000, 2001, 2002 to find more than one negative year. And I think this is more like the 70s than the 80s. So let me go with my thesis, and then we'll take any questions you guys have for me, specifically for me. But my thesis is the meeting on May 31st, and I've said this before in this live stream, between President Joe Biden, Treasury Secretary Janet Yellen, and Fed Governor Jerome Powell, was basically Yellen and Biden saying, look, we are not going to come out and blame you for inflation, but we need you to get after it. I don't know who told the joke, but how do you know when a politician is lying when their mouth is moving? Biden's the politician here. You could indict Yellen if you want, but Yellen, as I've pointed out before, actually believes inflation should be allowed to run until unemployment is virtually eliminated. Now, her particular theory on that is that raises will rise, and that's happened. So she may have sat back and said, as far as I'm concerned, my theory's been proven true. You can kind of get after it a little bit now. But I think from a political standpoint, they're already blaming price hikes on Putin. They're about to blame the recession on Powell, the Jerome Powell recession, as they go into midterms, if we're there yet. But certainly, I don't think Joe Biden is going to run for a second term. If he did, he'd be somewhere in the range of 86 years old when it was completed. And I just think that's too old. But I think that he'll probably not run, and the Democrats will be able to say, we're in a recession because of the aggressive price hikes by Jerome Powell. Now, Jerome Powell, his term expires in 2028. So short of being fired, he has enough time to secure his legacy and get inflation down and get the economy up and running again. That certainly is not going to match the SEP, which is the economic projections from the Fed, the strategic economic projections. The SEP, they have, I have them here. I have them right here. So if I prop them up here and I read them to you, they see GDP being 2% in 2024, unemployment being 3.6%, last reading I think it was 3.5, and inflation being 2.3%, 2024. Now they have inflation at the end of the year being 4.3. This is PCE, by the way, not CPI. So knowing that PCE has a little bit lower of a reading, I think it's 6.6% on the headline and like 5.1 on the core. But their previous estimate of the core PCE was 3.9. Now they've got it up to 4.3. But by 2024, they expect GDP to be 2%, unemployment to be 3.6%, and inflation to be 2.3%. I think that's laughable, and they know it's laughable. But then I started thinking about it, and I said, well, how can they possibly think that's true? Well, they don't think it's true, in my opinion. They don't. I mean, what are they supposed to do? Release a projection that shows longer run GDP at -1 and unemployment at 7? I mean, can you imagine the uproar in the financial press and from politicians saying the Fed is deliberately targeting higher unemployment rate, which is against their mandate, and negative GDP? They can't do that. They literally can't do it, right? So they put this bullshit projection out there knowing that it's crap. And they're basically saying, we think we can engineer a soft landing. Well, this piece of paper here describes a soft landing. Not happening. We've never, as I've said before, we've never reduced inflation by 2 points ever in our history and not triggered a recession, regardless of what reduced inflation, whether it was just lower demand and a weaker economy, or whether it was Fed actions, or whether it was a pandemic, or whether it was planes crashing into buildings in New York, none of those recessions, none of those drops of inflation of 2 percentage points or more have come without a recession. So he knows there's a recession coming. Last thing I'll throw into this little rant. When he testified before Congress a week or so ago, I don't remember who it was, but I have the video and I'm actually looking for the clip. One of the senators said to him, the Honorable Paul Volcker just basically said, to hell with the results. We're getting inflation under control. Jerome Powell said, I knew Paul Volcker. I had meetings with Paul Volcker, and I'm hoping that history compares me to Paul Volcker. So in other words, recession be damned, we're getting prices down. So we're getting a recession. There you go. Enjoy it. We're getting one. Now, Mike's right. Doesn't mean the stock market's over. I actually suspect we've got another short-term bottom being made. I was very happy to hear Mike say that tomorrow could be capitulation if we sell off. I kind of hope we rally a little bit and capitulation gets put off till next week. But with options expiration and everything else, there's not a whole lot to say about that. But yeah, so a recession is coming. Jerome Powell knows it. He's been put in a position where he doesn't really have any choice. And so he's saying, to hell with parliamentary procedure. We're getting a recession done. And I'll get us out of it when we get into it. I think that's what he's saying. Baseline inflation was caused by government spending, not by a war. On top of baseline inflation came a war that caused more inflation than I think they shot for, obviously, because their inflation target was 2%. We were struggling to hit that. I really do think that some of the checks that went out, some of the spending that happened during the pandemic, I really do think Powell thought the economy could handle it. And then the demand spike came and he's like, oh crap, well, let's give it a little bit of time here. Let's give it the 3.7 to 3.8, at least till I'm reappointed and confirmed. And then the war happened. And then the supply chain wasn't easing. And then he was like, oh, okay, I got to actually get after it here. So I suspect, as I said to you guys before, I thought they'd do 50, but I wasn't going to be surprised at 75. The one thing I was surprised at is that he actually admitted that last Michigan sentiment number really pushed us over. I was surprised that they admitted that because wow, that's data dependent. One number. Granted, lowest Michigan sentiment reading ever, but still, it was just one number that pushed them over. So that's my rant on what's going on from like a macro perspective.
I can't really call that a rant. It was sort of like an orderly dialogue.
Okay, it was a what do they call it when you have to do, like when an actor has to do it was a monologue. That was my monologue.
It was. It's not. You want to see a rant?
Yeah.
Let's see.
All right. What do we got?
John A., you can explain what happened to the FL. Well, you sort of did already. Do you believe this is the only time the Fed will go 75, or will they go 75 July?
So, John, I didn't believe they'd go yesterday, so I'm going to say no, I don't believe it's the only time they will, but let's watch the data. They're clearly data dependent, like literally tick for tick data dependent. So let's watch the last couple of data points before the next meeting, and I'll let you know that.
Do you see oil will go up one more time before a big dump?
I don't think oil's going to have a big dump. I don't.
Oil, that was a pretty bullish price reversal today.
Yeah. You could call that little rotation there a big dump, but I don't think there's going to be a big dump. This letter that Joe Biden, there used to be a guy in here, and I haven't seen him in a while. I think his name was Tom, and I believe he called me Bob Trump once. And I really hope that my criticism of the economic policy of the administration doesn't make people think I'm a Republican or a Democrat, quite frankly, because I'm neither. I haven't voted for either party in the last two elections. I voted Libertarian both times, simply because I didn't like any of the candidates. But that letter that Biden sent to the oil companies is just laughable.
Don't even start. You want to hear a rant?
Yeah. If you go back to the 2020 election, I have the video because I had to send it to a friend of mine. And it basically was Joe Biden saying, no more subsidies for oil. I agree with that, by the way. So he said, no more subsidies for oil, no more drilling, no more leases, no more anything, no more drilling at all. And now he's like, you guys should be producing more. Are they actually supposed to invest in new wells and new refineries when there's an administration that basically said, we're going to do everything we can to get rid of you? It doesn't even make sense. They're not a public utility. They're not. So I don't. Okay, John. I'm sorry. Can you put John A's last? This is important, and then we can go back in order. If you don't see oil going down, it's a good idea to buy the dip if we go lower. That's never a good idea. Price action is what you want to follow. People have said this to me before. Well, if you don't, and actually, I got a guy on my phone right now who said to me, well, if you don't think it's going to go much lower, then I should buy it. No, you shouldn't. Because yes, it is true that it can only go up or it can only go down, but risk reward has to be proper and a signal has to be there. Otherwise, you said it wasn't going to go up, so I bought. You said it wasn't going to go down, so I bought it. Well, yeah, but I don't mean it can't go down $1 tomorrow, or $2, or $5, and then rally up $10 from there. And when we drop back and look at the chart, if you guys have a spare, it's less than $100. Buy Mike's candlestick math course on Path Trading Partners. You'll understand why I say that kind of thing. It's the candlestick math at Path Trading Partners. Purchase that. It's cheap, and you'll understand why I say something like that. Go ahead, Mike. I'm sorry.
No, yeah, it was. I mean, did you hear the energy secretary? We want you to, again, reiterating. We want you to do more, but in 5 years we want you gone. So it was like, all right, like the break even turnaround stuff for all this stuff is like 10 years. So you want us to immediately just magically produce this stuff, do all this capex major investment, and then you want it all to disappear in 5 years. Well,
Imagine if your spouse, you're a girl you were dating or a guy you were dating. I don't care if you're a girl or a guy. I just covered everybody. A girl you were dating or a guy you were dating said, I want you to marry me and I want you to pitch in on a massive house with me. And in 5 years, I want you gone. Imagine if they said that up front. I'd be like, go yourself. I just bleep myself out. Seriously, go yourself.
yeah, that's what it is. It's like you're doing everything to get rid of the oil companies, and then you want them to turn around. But they took massive losses over the debt COVID. They took massive losses, and now it's like, oh, they're making profits. Oh, it's all insane. And then they want to do gas rationing and price controls. It's
Listen, if they want to, if they want to do, imagine if they came out with a bill that said interest-free loans to carbon-based energy to offset the fact that we want them to go away. Can you imagine the outcry from people who are against carbon fuels? If they said, look, we need the drilling right now, we're going to give you interest-free forgivable loans from the government to build refineries and to drill. But when we tell you to stop, you got to stop. Nobody would say yes. I don't know, whatever. Anyway,
Daniel's a lifetime libertarian. Do what you want to do, but I don't want to pay for it.
and don't try and make me do what you want me to do. That's why I'm not on CNBC anymore. They try to make me do what I didn't do.
George, Bob, I remember in 2008 after getting very high that is oil and gas getting very high, not you, George.
Mm-hmm. I honestly read it that way. I was like, George is going to tell us a story about watching Bill and Ted's Excellent Adventure for the 40th time.
No, he was talking about oil and gold crashed that summer, and the market did in the fall. Is the market going to fall by itself this time?
Well, I mean, again, 2008, the fall in energy was about demand destruction because of a pending recession, because of the housing market blowing up. In the short term, short to medium term, I don't see oil crashing. Natural gas is under a bit of weakness. I believe it was Sterling. Mike, I don't know if you were able to get that in time
No,
when Sterling asked the question.
No, I didn't.
All right, so Sterling said, "What happened to natural gas?" As I was like, I had my mouse in my hand and I'm clicking the to get out of the webinar. And Sterling said, "Bob, what happened to natural gas?" Well, there's a fire at an LNG refinery, and they're saying it's going to take multiple years to recover their capacity. So what that does is that leaves the U.S. specifically oversupplied with natural gas. Natural gas can't be shipped because we don't have pipelines going to Europe, so they can't be shipped to Europe unless it's liquefied, and the LNG refineries need to liquefy it, and then it's sent over in these super cool tankers as liquefied natural gas, and it's turned back into usable natural gas when it arrives at its destination. So this refinery had a fire and they've lost capacity. So now the U.S. natural gas market has tons of natural gas that can be used to power electricity and to heat homes when the winter comes. So there's the crash based on that, right? Based on a little bit more of a, and that'll start to show up in the EIA numbers in a week or two. Didn't show up today. That's what happened to it. And now we're going to have trouble rallying kind of past these points until liquefied natural gas is back up. And the LNG refiners are actually building more refineries because a lot of even green people think that natural gas, LNG specifically, will be sort of a crossover fuel or a bridge fuel from carbon to green. So, Sterling, I don't know if you actually found it before I was able to tell you now, but that's what happened that day. But I lost my train of thought. Anyway, yeah, so there's that.
Bob, during recession,
Oh,
what's that?
yeah, the 2008 crash was based on demand destruction. So if the Fed is actually able to engineer demand destruction, you will have a fall in price, but it's not going to come this summer. And we literally just started the summer driving season last week. And China's back in lockdown, so their demand is about to spike again, not fall. So, yeah, I mean, could it crash? Sure. But it's not going to crash with a sudden housing drop like we had in 2008 because you're not going to see a sudden housing drop. We're going to see prices fall in housing, but I don't think it's going to crash like in 2008.
Bob, during recessions, usually people start cutting out costs and try to buy the bare necessities. How do you think this affects companies that rely on major consumer purchases like Apple?
Well, you're not seeing Apple's price recover, are you? So I think your answer is right there. I mean, Apple's probably a really good example. Who was that, Wavy?
That was
Um, yeah, Apple's probably a really good example. Mike, if you can throw up an Apple chart, it's about to fall between 2 trillion. I'm sorry, below 2 trillion in market cap. And the last I looked at the chart, it doesn't look that good. So that's based on what you just said, Wavy, is that it'll be one of the things that people, there's people, I have a friend who upgrades every time a new phone is available. He's a huge Apple file, and every time there's a new phone, he upgrades. He'll likely not upgrade the next cycle or maybe the cycle after that if he's getting hit by inflation. So, yes, you want to watch for companies that don't sell necessities. Now, also, some of the inflation, I know we don't talk about individual stocks too much while I'm here, but some of the inflation sensitive stocks took hits today, like Kroger. Kroger took a hit today because, again, interest rates fell. So, interest rates falling, did it actually bounce? I can't even see it. Did it
well, they
bounce
had
off the
earnings
low?
this morning. They had
Okay.
earnings rallied
So,
up, filled the gap, and then rolled over a bit into the close.
Exxon was another example of an inflation sensitive stock that kind of took a hit. Um, if you look at yields, right? Yields fell today. Last time the Fed hiked rates, yields rallied. So let's look at the two dynamics between those two things. So the Fed hikes 50 basis points on May 4th. May 5th, rates start rising, right? Why is that? Well, there must really be serious, stable inflation for the Fed to hike 50. So we need rates to go higher because we need higher yields to combat the inflation we're about to deal with. Now rates fell. So what's behind that thinking? Well, the dynamic there would be, well, the Fed's serious about fighting inflation, maybe it'll work, right? So why would inflation sensitive stocks fall? Because of future prices possibly being lower and therefore future earnings being lower. Now, you might think that there's a little bit of a divergence of opinion there between me thinking crude oil is going to continue to rise, yet Exxon might continue to fall. And there's not. If you look at historically the correlation between a stock like Exxon and crude oil price, it's barely above 50. They don't correlate as much as you would think because companies have way more to focus on. And this is why I always tell people if you have an opinion in crude oil, you should be trading crude oil. And the CME micros make that a lot more palatable. Um, Basically, what correlates to the price of crude oil 100% is the price of crude oil. Whereas something like Exxon or Valero or Chevron, they don't correlate. Chevron, I believe, is the one that's closest to correlating to the price of crude oil, somewhere above 60. But still, it's not 100, right? It's not one. So anyway, I think I went on too long already.
Hey, Bob, real quick, we got Japanese.
Yeah, the BOJ.
Yep, tomorrow, and I mean, there's that peg.
JGBs were 45 last time I saw them. Where are they
It,
now?
it's 45 still.
Okay, so this is the peg to the 25 basis point peg is breaking.
Yeah,
It's going to be super interesting to see if the BOJ just gives in and abandons it or says we're going to get much more aggressive to keep it. That I mean, wow. I actually had a friend who watches the BOJ like a hawk say to me, is there any news? I'm like, yeah, the only news is that people think the BOJ is going to abandon it today. They think they have to. So a lot of analysts think the BOJ is going to abandon the peg tonight. So we'll see. And that's what they're obviously setting up here for. It'd be interesting to see if they actually said something effective. We're going to fight harder to keep it at 25. A lot of people might get hurt, but that's a hard fight, man.
yep. That's going to be interesting. It's going to be interesting to see what happens with that meeting, because again, I
Mm.
mean, that was a pretty big 2 day pullback
Yeah.
in the
Hey, I'm sorry, Mike, real quick, to sterling again. Gas prices in the EU are up like 60%. So the one you're looking at when Mike pulls up a chart, that's U.S. natural gas. Keep that in mind.
and they're going
Gazprom
to
has shut
trade
off one
very
of Europe.
differently. U.S. natural
Yeah,
gas and Europe natural gas is trading incredibly different. So don't
right.
mix
And
it.
you would think again that like considering like Gazprom shut off another pipeline to the EU for gas, so they've restricted the supply even more for natural gas. So that jacked the prices up another 40% yesterday. And you would think, okay, well then prices should across the board should rally. That's not what happens when you've got no capacity to ship your natural gas somewhere. So without turning it, without liquefying it, we can't ship it.
Raj had a comment about 30-year bonds. I have the notes up here right now. We triggered a really nice double bottom pattern, both in the notes themselves and on the yields today. Don't know if you saw that with the yields. There's a nice double top. Essentially, already down to the first target, but if this continues to fulfill its whole thing, you could go back to 3.06%. That's a pretty,
I suspect that'll happen.
huh?
I suspect that'll happen, and there's your short-term equity market bottom. Dow closed down 19% today. So as I've said multiple times in this, do you believe that the Nasdaq and Russell will be pulled out of a bear market by the S&P and the Dow, or do you believe the Nasdaq and Russell will pull the S&P and the Dow into a bear market? The S&P is closed fully into a bear market. The Dow is closed down 19%. So
19% from the all-time highs, not 19%
yeah,
today.
no, from the all from the all-time highs.
Now
Correct.
that would be a day.
You are correct, sir. Anybody
Oh
know how to make
boy.
chicken salad? Make chicken salad too.
Hey, there you go, Wavy. Only Kramer calling for a market crash can save the market now. Remember, it used to be Gartman, Dennis Gartman. He'd be like, "Stocks are rallying," and you'd be like, "Sell everything." And he'd be like, "Stocks are going in the toilet." You'd be like, "Back up the truck." Now it's Kramer.
And then Garmin retired.
Kramer's taken the what you know what word do I want? The baton. He's taken the baton from Gartman since Gartman retired, and now it's Kramer. The inverse Kramer effect.
In 2018, I spoke with Gartman. I spoke at a CME event in Las Vegas at a Traders Expo with Dennis Gartman. And Carly Garner spoke before me, and then I spoke, and then Gartman came up. And after that speech, I was like, wow, he should absolutely retire. I mean, he was just all over the place. He was making no sense. He was all over the place, talking about things that happened in 1946 in the cotton market. I mean, it was just like, it was insanity. It was completely useless.
Well, I think Kramer should retire too. So,
I do too.
although where would we get the inverse plays from? Raj asked thoughts on the housing market. Does it crash?
What?
Does the
Thoughts on
housing
no,
market
no,
crash?
no. I don't think the housing market's going to crash. And the reason I say that is because so it's a two-part thing. Mortgages have more than doubled, right, in a very short period of time. So that takes a big swath of people out of the market. Also, it's forcing some people to sell their homes, which adds homes to the market. We were at about a 1.8 month supply in homes when I last looked. Historically, we got to be at about 6 months for a healthy housing market. It's going to take a lot to get to 6 months. So a lot of these existing home sales need to get into the market. But even if you put half the existing homes in the market, it doesn't get us to 6 months of supply. You need new homes to be built, and those are still restricted by the supply chain. Last but not least, the rental market is very undersupplied as well, and prices are skyrocketing in rent. So at some point, there's going to be this sort of little inflection point that's going to cause a base in housing by renters not being able to afford their rent, and the rent is higher than them mortgaging something small at the higher rates. We didn't have that scenario. We didn't have this fire sale. We don't have that fire sale scenario that we had in 2008 of the basically people walking away from their homes, leaving their dog and cat there, and leaving their furniture because they just can't pay for it. That's not the case right now. If a bunch of people who couldn't afford their adjustable rate mortgages have to sell next month, there's a line of people waiting to buy those still. And all they got to do is reduce the price a little and the line will get bigger because rent is so expensive right now. So it's a different scenario because we don't have the amount of subprime loans that we had then. I don't think Michael Blurry's right this time. I really don't, because the situations are much different. By the way, you tend to like what worked for you before, and you tend to see it happening again. The best trade I ever did in my life was long crude oil. So you'll always see me leaning toward the price of crude oil going up. It's a fault I recognize. Okay. I did not buy crude oil when it was going negative because just for the record, because that's something I'd never seen before. But somebody like Michael Blurry will probably predict housing crisis every 10 years because that's where he made the most money he's ever made in his life, which is a lot, by the way. Like I'm not saying my crude oil price puts me in the realm of my crude oil trade. Did not make me as much money as Blurry made on the housing market crash. But I suspect he'll predict a lot of crashes. I think if he looks at it closer, I think the word crash is what's incorrect there. If we look at 2008 as the baseline for what a crash looks like, we're not getting that this time, in my opinion. But all of you who took out adjustable rate home equity loans based on the price of your house going up, you might want to close those and not spend any more of it.
Yeah, and I've been tracking because I want to get mine sold, just waiting for a couple other things to line up. And the inventory and the price range that I'm selling at is so low. I mean, around us, there is, I mean, literally in a 7 suburb range in the house price that mine fits into, there's 40 for sale total in 7 suburbs, and these aren't
Wow.
small suburbs. Uh, I mean, I live in a smaller one, but it's interesting. So you still, even if prices come off a bit, it still could be interesting with that. And by the way, we did. They built a couple about right before the pandemic, 10 minutes from me, a real luxury apartment building. So my wife actually went over there today because we might have to have her here for a while as I go somewhere else. And she looked at the small, because it would just be her staying in an apartment there, and the 670 square foot smallest apartment they have. The rent price on that was the same of what we pay for our mortgage for a 3,600 square foot house.
Wow.
For 600, it was 670 or 690 square foot apartment. Not even room for a kitchen table. You eat at the countertop bar. Like, and that's the same. People there currently are paying for that size of an apartment what we're paying on our mortgage for a 3,600 square foot house. So that is very interesting, I thought. So I don't think unless we get a ton of inventory coming on, it's I don't see a crash either. I see there will be price pullbacks, but there's not going to be there's still, and she asked, well, how many units do you have available? And they're like, this is a huge building. I mean, there's hundreds of apartments, and they're like, we got one opening. So it's a different situation. And then I looked at another one about 2 minutes from there, another luxury one that was built and completed a year before that one, and they have no vacancy right now, and they're virtually at the same price point. For a studio is 2,100, and a 2 bedroom is now 4,600 a month. So I mean that's way over what we're paying for our mortgage. Sterling asks, since several hedge funds use stocks as collateral to buy real estate, isn't it likely that they may begin to get margin called, which would cause them to liquidate their real estate as well?
I don't know. Do several hedge funds do that? Honestly, that would be news to me if they do. So I'm not sure.
I mean, you got more people like BlackRock buying up that have been buying up real estate for quite some time, but
I just always made the assumption they just write a check for it. I didn't know that they would use stocks as collateral to buy. Sterling, if you have an article on that or something, I'd love to see it because I haven't heard about that. One of the things, talking to one of my friends who works, talking to two friends, one of my friends works for a private equity firm that purchases and runs office buildings in Chicago. And the other one, um, basically a bank fund, he works in a bank treasury department. And they both had kind of the same opinion about. I have sort of a weird thing where I'm like a libertarian ultimate capitalist, but I don't like these big funds and private equity groups buying houses. Now I can't make this work in my head because it goes against everything that I believe. You should be able to do whatever business you want to do, right? And I can't think of a way that I can sort of square that circle of me being against BlackRock buying houses. I shouldn't be against it, but they're bidding against individual people. And one of my friends said this, and he goes, the one thing that's good about them doing it is that they have a cut and they will respect that cut. And I'm like, what do you mean? I said, well, if they're not making money, the price goes down so much and then the rents go down so much, they'll just dump them out to the market. They won't be like a person who maybe like keeps the price too high, too long, 164 days on the market. They'll just dump them. I'm like, okay. I mean, that makes sense to me, just like they would a trade. Because if this is a trade, it's a trade, right? And they do have to mark to market. So if they have a portfolio of homes, and by the way, it was a while back, but I saw some research that said they're a very small part of the total US home market, the number of homes they own. But if they had a portfolio of, let's say, $1 billion of private homes that they're renting out, and that value goes down to 750 million, they have to mark that to market. So they might dump them just to kind of cut their losses on them. But I don't know. I honestly, Sterling, I'm not really sure that they do that. Maybe they do. Like
All
I
right.
said, if
Well,
you found an article or research on that, please send it to us.
I have a question for you along this lines. So, what about funds and
Yeah.
things buying up the pharmaceutical stuff and jacking the prices like
Yeah.
500%?
Again, I I struggle with these things. I really do. I mean, look, they theoretically should be able to. I mean, I'm not sure that, Martin Shkreli did anything wrong and jacked up the price of a drug. I mean, sure, I guess that's sort of an indictment of the entire structure of the medical and healthcare system that we live in. Theoretically, yes, they should be able to buy the drug and jack up the price of it. They really should. Now, I don't, that's never happened to me personally or anyone I know. So I don't have as big an emotional attachment to that. And I admit this is very hypocritical. Um, yeah, I don't know, Mike. I don't know what I
I
think
was just
about it.
wondering.
I honestly don't like.
I
Yes, they
mean,
should be able to do it.
I mean,
Yes,
I'm a
BlackRock
capital
should be able to do it. They
as I
should be
talk,
able to buy homes. Yeah,
yeah, as I
they should.
talk. I mean, in the capitalist model, yeah, anything goes. I just would rather lean towards some more enlightened capitalism, which means you, you don't make money at all costs. You make money because there's many ways to make money, but to buy some of these drugs up and then jack them up because also you think insurance is gonna. It's an interesting argument, especially if you have a libertarian mindset.
Well, the thing is like if you're able to, there should be something built into patent law. In other words, so if you're able to like patent a drug and there can't be a generic version of it, then there should be something written into patent law, in my opinion. Because honestly, patents aren't really capitalist either. Anti-monopoly laws are not really pure capitalism, right? Pure capitalism is the market fixes. That's it. So if you have a patent on something and nobody can copy it, well then you have the market for that thing. So it doesn't really fall that if you're using patent law that you should be able to jack prices up because there should be a point in time where you lose your patent if you do that. That would be the way that I would explore it.
Daniel says Forbes has an article about using margin loans to fund real estate purchases.
Well, is that for individuals, Daniel, or is that something that says BlackRock is doing that? I wouldn't use your stocks to buy a home personally. I wouldn't. I would sell your stocks to buy a home. A home you're going to live in.
But
You
what
want to flip homes on a margin loan on stocks? Feel free. You won't be talking to us much longer in a year because you won't be trading. Go ahead.
But shouldn't I take that home equity loan to buy stocks?
Oh, dude, I got a story for you when we're done here with that. Later, maybe tomorrow, I'll call you and tell you a story. Oh. I'll put it this way. This is a guy who, whenever he makes money on a stock, he made money on it, and he was really smart to buy it. But when the stock turns around, it's a long-term hold, and he's just going to hang on to it because it'll come back. Any trade that is a loser, it's a long-term hold. When he
Yeah,
buys it at 10 and sells it at 20, it was a great trade. He's really good at this stuff.
and the trade, it's the people whose trades become investments.
Yep.
Oh, now it goes in my long-term portfolio since it went against me. It's like the people I still know who are holding Cisco from 2001.
Yep.
It's not back to break even yet. I can't sell it. Well, you've held it for 20 years. I'm sorry.
Oh, believe me, in 2 or 3 years, this same guy will be talking about how he made money on all those stocks he held through the downturn. Oh, it's smart to hold them. I made money on those. Well, that money could have been earning you
Yeah,
friggin' 3%
the cost
your
of capital
bill.
too. I mean, people who've owned Cisco for 21 years. What's your cost of not putting that capital to work for 21 years?
Right. Right.
Bob,
Anyway,
do you think China will overtake the U.S.?
in what way better than bear?
Bear better than beer.
Oh no, beer is better than bear. Um, economic size, yes, I do. Just by sheer population, they have to, especially since our economy is about to shrink a little bit. It's interesting to note our economy. our GDP is 30% large. I'm sorry, 13% larger than was pre-pandemic. China's is smaller. So I think it's about 8 or 9% smaller. And that's the ultimate level of GDP. It has nothing to do with the numbers that we watch that gives us the monthly, month over month percentage change, quarter over quarter percentage change. The baseline GDP number is 13% larger than it was pre-pandemic. So we were able to grow despite supply chain, inflation, all these other things, pandemic. And why were we able to grow? Well, because the way you grow GDP is by capital investment and consumer spending. And we spent borrowed money that we got from the government. So what happens with that? We have to at some point contract to make up for it because money's not free. Modern monetary theory, regardless of who wrote it, who endorsed it, has failed, basically. I think there's enough proof between Japan and now the US that modern monetary theory is debunked. China engages in that in a very big way. They don't borrow as much because people don't buy their bonds yet, but they print and they spend. They buy a lot of US treasuries and they use that money. So they're all about government money, government spending, and they haven't quite hit deficit spending yet, but they were close. So they will overtake the US in terms of economic size. I don't know that I'll be alive to see them overtake it in terms of influence. And I don't think the renminbi will become the reserve currency unless the People's Party, Chinese Communist Party, gets overthrown.
Well, there you go. Hey, Bob, red or green tomorrow?
I think green tomorrow.
You're going with green. Bob's going with green. All right.
Yeah. What else? Anybody got anything else? I got to make chicken salad. I don't know how to make chicken salad.
What do you mean you don't have to make chicken salad?
Same as tuna salad, Mike.
Yeah, you use your mayonnaise. You can put you want the
Well,
deluxe chicken salad. You know, chicken
what's
salad
that?
you put in you get your
Grapes.
yes, you put in grapes and walnuts.
Wow.
Yeah,
I'm doing that. I'm going deluxe.
go deluxe. Grape, walnut, with your good diced up chicken and some good mayo in there. Oh, that's good. So, there we go.
Here we go. You think it's going much lower, or are we okay?
See, I love the big strike is that 3,700 for the S&P, which would be a rally and then a pin there. I'd love to see that capitulation flush out, though.
Yeah.
I really would. And we
You,
have a lot
so,
of technicals that are set up for that for tomorrow. But
so question for you: if we get a capitulation sell-off tomorrow, is that the end of the bear market bottom, or is it a
no,
medium-term bottom?
it's a medium term bottom.
Hmm. Cool.
And I'll tell you why. There's too many people. They don't. You know how many traders don't get earnings compression yet?
How's that possible?
They're literally they've been trading since 2010 2011, and they go, well, the P's are good. I'm scooping up everything on the rally, and I'm like, well, what happened? That's fine, but what happens with earnings compression with this stagflationary environment? And they're like, what's earnings compression? I'm like, well, that's when the companies earn less so that raises the PE naturally. So your PE at 16, if the price of the stock stays the same, just where your earnings compression could go back up to 22, 23 over the next couple quarters. They just look at you like, I haven't seen
They
that
don't know
happen.
what PE is.
And they're
Like they
like, I
don't
haven't seen that
understand
happen.
what PE is.
And I'm like, yeah, well, you've been trading since 2011. It's why everything you think is a growth stock.
They don't
So,
understand that PE is simply a ratio of price to earnings
yes.
multiple. It's a ratio.
And if earnings go down because of, stagflationary pressures, and you can only pass a certain amount on to the consumers, and the consumers eventually stop buying, then you can have earnings go down, which then puts an earnings compression on it. So that's where, yes, P to E ratios are better, but I see once we get some kind of bottom, we'll rally. And then second and third quarter earnings are going to get very interesting, and we can see a lot of earnings compressions where the PEs actually need price to drop again before they're attractive. And then we can get the long-term bottom in. So, with that, John, come back to the next one. We'll take a look at India passing the U.S. economy.
That was a
So,
little esoteric.
and Rich says, Bob, he likes your shirt. Rich likes Bob's shirt.
Thank you, Rich. I like your shirt, Rich.
So, there's where we go. Okay.
All right, guys. If
All
no
right.
one has anything more for me, I'm out.
All right. I'll chat with you later. Thanks, Bob.
All right. See you guys.
Hey, not blurry, Mike. I still got to work on that. I got to fine tune that a little, but I'll do that over the weekend or tomorrow. PE, and that's why Cali High School stopped teaching math. There's a lot of people who don't understand stuff, and they don't. It's again, we could be putting in a medium term bottom, but we won't be putting in a long term bottom. And as so, hopefully, we'll see. By the way, the two big strikes tomorrow were 3,600 and 3,700 for any pin. Daily cycles trying to. It's going to get really freed up for the rally, though. Even if we have a slight rally tomorrow, it's going to get really freed up with all this gamma expiring tomorrow. So if we're going to have a substantial rally, even if we rally minorly tomorrow for a pin to like 3,700, we could start the bigger rally next week once we get a lot of this gamma out of the way, this negative gamma out of the way. This is a huge options expiration. Huge. So please keep that in mind. The key things I am watching, it'll be interesting because if we rally, if we rally overnight, I'm watching for the breakdown zone, which is virtually 3,700 on any rally. So that would be the key area. If we sell below, back below this 3,650, which is a very minor pin area, then I'll be targeting tomorrow. I'll be targeting the 3,600s. And then we'll see. I don't have a better answer for you because I don't have a long-term buy setup yet. Tomorrow might generate a number of buy setups, and if we have a massive down day, like if we go to pin 3,600, we could get a capitulation buy on a number of things I follow tomorrow. Just letting you know. So if you see a big down day, I'll reiterate this tomorrow. If you see a big down day where we target, where we don't bounce to 3,700 and we start tanking into OPEX, then there'll probably be some pretty substantial capitulation buy and a pretty major rally starting next week. So that's where we stand. I mean, other than that, it's going to be watching the price action. By the way, all these potential doubles are off the table. So what does that mean? The doubles are off the table, so we can't utilize them for the targets. Now, let me just use the Dow because it's up here. Let's say not tomorrow, but let's say starting next week, we got above this peak and it's no longer a double. You're into a clear path move. So what do we use for targets? Well, we use the reverse harmonics, and then we use the breakdown zone of the clear path move. So it actually loosens up the targets even more. But I just want to let everybody know on all these potential doubles, they've all been taken off the table. Dollar index, we'll do more tomorrow since it's OPEX, and I got to watch some price action tonight. The double on the dollar index completed today, back to the bottom of the rotation zone, right to this 50 to 62.5. And we still have the bigger double in play. So I'm really curious tomorrow after we get the Bank of Japan, which is going to get interesting in a few hours. But the dollar closes tomorrow below about 102.90. Then I'm targeting this low area, and then we could have a potential major top in the dollar index, which is definitely tradable. VIX, you see moving up, but no capitulation fear yet move. Now, if we did have that big move tomorrow, we'd probably get a capitulation sell-off, at least in the most recent high areas for the VIX. What else? What else is tradable for me? This I think we're trying to put in this low with the notes, at least an intermediate term low back to the breakdown zone in the 50% level. So you have this really nice setup here that's still even tradable intraday over the next few days to come back to the other side of the daily rotation zone, the full target for the double, and the 50% retracement harmonic. So that looks like it's lining up. Other things I'm watching, if we do put in a bottom, okay, short term, Walmart triggered a buy signal today. It again is more aggressive, but even if we pulled back tomorrow, would not invalidate it. The low has to go below the lows of 20th of May. But this triggers a front run pattern for me. We have the gap fill up here potentially, and then the other side of the rotation zone, you get a close above the 62.5. Then I'm looking for the higher roll to the highs, and then a possibly higher roll into a big double bottom pattern on Walmart. So that's a play I'm keeping an eye on. Microsoft, we do have a little potential that won't trigger tomorrow, but I am keeping, if we start to get the rally on, we have a couple nice gap fills up here, or one at least, one potential gap fill, and we have a potential double trigger. So that's what I'll be watching for next week. I just wanted to throw that out there. These are things if you want to add them to a watch list. Keeping an eye on Disney also if we rally. We do have a potential little double. And we have love this with the first target stop reduction being the gap fill target also into that daily rotation zone and just in front of the breakdown zone. And then if it continues higher, we have another gap fill. So if we start getting a rally on the markets, those are some plays that I am keeping an eye on. Just wanted to share that with everybody. Again, just because I mention it, you have to decide what your play is for yourself. I can't give trading or investing advice. Tesla retested that 87.5 today. Didn't quite get back down to the full thing, but you still, if we do get a rally on, the only play in Tesla is the it gapped, very weak sauce gap fill attempt, and then the rollover play was that. So that is, we still do have a gap fill play that could roll into a slightly bigger corrective pattern to the upside. What's up with lithium stocks tanking in the last week? I have no idea. I do not know. But they're approaching critical support, and that's where I'm going to be watching for some stuff. By the way, you had a lot of rotation. We looked at crude earlier, but we had a lot of rotation in the commodities today. This was a pretty substantial move with that double on gold and then moving back up to 50. So I want to see if this can finally get some follow through, but gold up. Silver completing a double pattern also. So I'm going to try to watch for more upside in that. We already looked at crude. So keeping an eye on that also for the break. And again, uranium still getting beat up. See, some of these things like uranium, like lithium, they're back at very critical support. And this is why you got to keep trading around a core position. Because now it's at critical support. We get, by the way, a close above today's high is an aggressive buy pattern on uranium. That's about it. What I'm keying off to tonight is what the yen's going to do and whether they reestablish this peg or not. That's going to be really one of the market moving things. All right. How about Amazon? I don't have much in Amazon. I mean, you have this little, very sloppy potential reversal. It's almost a triple, but it's definitely tradable if the mega caps and they start going into some consumer discretionary stuff gets a move on. especially if we put in a short-term bottom. Above 109.05, you have this gap play up here. And if you go off the conservative targets, if it doesn't make a low tomorrow, it's essentially look at it, the full target is right at the gap fill play. So that's another one to keep an eye on next week. Not necessarily tomorrow, but next week. And you do have a gap fill play to the upside before then. That's the only thing. If this does roll lower, and this is getting to the point where it's getting a little exhausted to the downside before the next rollover move, that's why we're getting so many things. Even if we sold off tomorrow, that we trigger a lot of exhaustion moves. A lot of exhaustion moves. So that's what I'm keeping an eye on. If it does break down 97, 94, 95. But right now I'm watching for a number of these things to start kicking in next week. Yeah, and that's fine. I mean, I don't blame you at all, Sterling. Expecting another day of sitting on hands, the volatility is nuts. And tomorrow could be extremely volatile with sudden reversal moves, especially towards the end of the day. Meaning you can run 10, 15, 20 points and then reverse them like in the S&P. Yo, Lauren. So that's where I sit. All right. I think that's good. We'll reconvene. Powell will be speaking about 15 minutes before the live stream. And again, we still have Powell going tomorrow. And then the big thing is option expiration. So that's going to be the whole thing tomorrow. And at least that will be cleared up. And then we'll be able to reassess with hopefully a clearer path going into next week. That's why everything, including tomorrow, is very tactile trading. And even if some of these patterns trigger tomorrow, I'm going to be watching for the ways to play them at the beginning of next week and not hold over the weekend. That's where I sit for now. Again, thank you everybody for joining. Thank you so many people. And I will talk to everyone later. Have a wonderful evening. Bye.